Stocks slip after a steady open as concerns over slowing earnings growth and uncertainty over Trump 2.0 linger even as the US Fed delivers another rate cut. Oil and gas and realty are the big drags even as IT and consumer durables eke out gains.
Indian Hotels serves up a good show in a weak quarter with higher than industry occupancy and improved average revenue per room. The hospitality major expects double-digit revenue growth in the second half of the year.
Cummins posts better than expected revenues and profits, shrugging off concerns over the impact of transitioning to less polluting CPCB-IV gensets. The company maintains double-digit revenue growth guidance for the year.
Federal Reserve Chair Jerome Powell, on being asked whether he would step down if called on to by Trump, responded with an emphatic no. He clarified the president doesn't have the powers to fire him, not permitted under the law, he exclaimed.
You're watching us here on Halftime Report. I'm Mangla Malu. With me today is Vivek Iyer. On the top of our screens, we have the frontline indices. We opened in the green, we opened in the red. Thereafter, there was a bit of a recovery. That got sold into right now. We're standing just above that 24,100 mark for the Nifty. The Nifty bank has it slightly worse, and the mid-caps actually are seeing a fair amount of sell-off. The market breadth tells you that there are more than two stocks which are declining for the number of stocks which are advancing right now. Both the mid-cap index and the Nifty bank currently at the low point of trade, and the red and green lines are the widest that they have been all through the morning right now. Almost 1,700 stocks in the red for 700 which are advancing. On the advancing side, we do have a bunch of stocks which are gaining. IT in particular stands out, perhaps on the weakness in the rupee and maybe improving prospects for the US economy as well and valuation comfort, but no respite for stocks like Reliance, ICICI Bank, SBI, which continue to be key draggers on the frontline index. Hi, Vivek.
Good afternoon, Manglam. Very rightly put, the selling pressure in the last half hour has actually intensified quite significantly. The entire pharma pack that was holding out in the morning, seeing quite a bit of selling pressure. Along with that, banks, especially names like RBL Bank, etc., seeing quite a bit of selling pressure. Names like National Aluminium, Nalco, that were actually trading in the green at one point of time, now trading near the day's lowest point. And even the auto companies, remember Mahindra as well as Escorts, actually had pretty upbeat commentary as far as H2 was concerned, but even those stocks have seen quite a bit of a sell-off from the opening hour gains that they see. But moving on, Matrimony.com is the first management on the show today. It reported a weak set of Q2 numbers. Company's revenue and EBITDA margin came in under pressure. Average transaction value also remains flat. To discuss this and more, we have Sushant Pai, the CFO of Matrimony.com, joining us. Good afternoon, Mr. Pai. Thank you so much for joining us. It appears to be another quarter where revenue growth as well as other metrics appear to be quite weak. What exactly led to this kind of a pressure in Q2?
Yeah. Good afternoon, and good afternoon to all the viewers. Yes, Q2 has seen some pressure. Typically, it's a seasonal quarter, and it's also come at the back of a weak Q1 as well. The main reason is I think we've seen a lot of inauspicious days in the last couple of quarters. That has led to the revenue decline in both these quarters. But as we see as of now, the wedding season is coming up. We are gearing for that. We have launched something called the Great Indian Matchmaking Fest. We are giving a lot of offers. We are tied up with a lot of brands for discounts. So we are gearing up for the wedding season. So we are hoping to see some amount of bounce back from a billing perspective. But from a revenue perspective, it is going to take a little time and it will come back only in Q4. But yeah, I think the main reason is seasonality.
Main reason seasonality, but then year on year it shouldn't be a big dip, right? We just have to understand a couple of other things as well. The first half revenues are down by about 3.5%. Given billing is down 5%, should we expect a negative growth even in the second half? What's your target for the full year?
Yeah, so we don't give any guidance. We have to see how things go along. But the way we see Q3, the billings will bounce back. On a year-on-year basis, there will be some bounce back, and even on a quarter-on-quarter basis. However, we have a lag between the billing and revenue because of the subscription period. So therefore, we believe Q4 will be stronger. So as we go along, we need to see how the year pans out. But right now, that's how we are seeing Q3 and Q4.
Okay, Mr. Pai, in terms of FY25, could you give us a guidance as to how exactly you expect revenue growth, EBITDA growth, margins as well as PAT? When you say that you expect Q4 to be a stronger quarter compared to Q3, will Q3 be weaker compared to Q2 as well?
No, Q3 will be better than Q2 in terms of billings, but there will be a revenue decline. Like I said, since Q2 has been a muted quarter in billings. When I mean billings, that's the collections, right? When the collections are low, the gap revenue for the next quarter takes some pressure. So that's why I said Q3 will bounce back on the collections, and that collections will have a better impact in Q4. So therefore, in Q4, we see better growth, and we want to end the year on a strong note as well. So that's the way we see. So on a full year, I think because of 2 quarters of decline and also third quarter revenue also, not growing, overall, there will be a muted sort of a growth for the full year as well.
Right. Apart from business, what's interesting is that increasingly there are a bunch of, profiles which have not enough authenticity. I mean, recently we saw, something go viral online where there was image, what do you call it? The image of the person who said it, there was identity theft, simply put. What are you doing to, ensure that that doesn't happen? How are you trying to increase safety measures here? Because the business, while it is important for you to, have premium verified profiles and get people married, etc., it also has that element of trust. What are you doing to fix that?
Yeah. So I know where you picked this up from. And clearly, the whole messaging is a little bit of distortion. There is a distortion there. However, at first, let me address the distortion. There is a claim that this is part of elite matrimony. Firstly, I want to clarify that elite matrimony is not listed anywhere on a platform because it's a confidential database. However, some issue has happened on a common platform, which is on the Bharat Matrimony platform. While we understand what happens is the profile is created by someone else. Bharat Matrimony or, our company does not create a profile. So if there is a fraudulent profile created, in this case, somebody has uploaded that image of some person here. It's just that, on a base of 6-7 million profiles, there could be some flaw in terms of something would have fallen out. But that's a very minuscule number. So I think people should not get petrified of platforms like this. We have our own fraud detection mechanisms. We use a lot of AI intelligence to weed away fraud profiles. So we also want to amplify that we are a very safe platform. If you see, we are also spending money in amplifying that. For example, a few months back, we had a tie-up with Vidya Balan to talk about, safety and of matrimony sites. What should people do, in terms of being safe? So I think we are doing all what it takes, but it can happen because we are a platform play, and sometimes certain verification, mechanics, will go out of the radar because it cannot be foolproof. But as an industry, I think we are, going to take more and more steps to make the platform safe.
Mr. Pai, let's talk about the average transaction value. For the past many quarters, it's remained steady. In fact, some marginal decline being seen over there as well. Now, in the context of heavy ad spends that you do, why is it so tough to go ahead and increase the average transaction value? It continues to remain in the range of 4,400 to 4,500. So when can we see that moving higher?
Yeah. So clearly, I want to clarify the average transaction value is just an outcome of our strategies. So for example, we don't have a target average transaction value. When I mean outcome of the strategies, the market is very complex, right? It has north, west, east, south. We have 300 plus communities. So we do our own segmentation strategies to price every, segment or every market. So it's an outcome of that. The second complication also is it's also a culmination of various products that we have. For example, we have a basic 3-month package. We have Jodi, which is in the vernacular play where the average transaction value is very low. And we have personalized services where the average transaction value is very high. So the proportion of all of this contributes to the average transaction value. So we are not too worried about it because it's an outcome. I think as long as that we continue to grow and we see paid profiles growing and average transaction value is what it is.
What is the expected growth that you have in paid profiles? How many have you added this year and so far? And what's the average addition per year?
Yeah. So typically, we add, for example, in this quarter, our paid profiles was somewhere in the region of 2.6 lakhs. That's the sort of number that we have. So that's the amount of paid profiles that we add on a quarter-on-quarter basis. So broadly, our strategy is that, when we grow, broadly, it should come out of the paid profile growth. The ATB will be sort of, flattish to some plus or minus sort of.
Okay. Thank you so much, Mr. Pai, for joining us. We wish you the very best for a strong H2. Let's now slip into a short break. We will get you more on the markets and stock-specific action on the other side. Welcome back to Halftime Report. Well, Lupin reported a strong set of Q2 FY numbers. India sales grew by 19%. In fact, it outperformed in diabetes, cardiology, respiratory, as well as GI in India. But US sales declined on a sequential basis. Our colleague Vinny Motiwala caught up with the top management of Lupin and began by asking about the quarter gone by and how they see growth in the Indian market.
We are very optimistic on the India growth momentum, as you saw in the quarter. Very strong momentum, 40% above the market. If you look at the first half of the year, we grew 30% above the market, which has been our goal. And very pleased that all our therapy areas, the major therapy areas, cardiovascular, diabetes, respiratory, GI, have been well above the market. Also, areas that we've been challenged in the past, like diabetes due to loss of exclusivity, has bounced back at above market growth. So very pleased with the growth in India, as well as continued momentum going forward based on both a strong portfolio of innovative products as well as our reach through a 10,000 people sales force.
I just wanted to know, I wanted to know about the diabetic molecule India, the patent expiry, that is over now. I just wanted a clarification on that front.
Yeah, I think some of the bigger ones are gone. We still have one which will come up at the end of the fiscal, which is the last of the exclusivities running out. After that, we would expect to be able to ramp up the growth even more. So I think we'll still end up at single-digit growth this year because we'll lose out something in that last quarter. But then from next year, we should start seeing stronger growth in diabetes also again.
Okay, that's great to hear. Moving on, let's just talk about the US business. And Nilesh, US business, bit of a decline when you look at it sequentially, though it's still in the range with the company had guided last time as well. So not bad on that terms. But what was the impact on a sequential basis coming in for the US business? And was there still any price erosion coming in on a Supra front?
So maybe I'll start and then hand over to Vinita. I think the US business is going strong for us. In the bigger sense, I think this is the complex generic pipeline coming to market. You see the year-on-year growth. Yes, you see a little bit of adjustment sequentially, but I mean, complex generics are just a very large part of what we do today. 40% of the business comes from complex generics in the US, and that's backed on the inhalation products that we brought to market. Very proud that we got both an MDI and a DPI to market. But I'll let Vinita add more color.
I'll just add that, while the business sequentially was a little bit down, it was primarily due to one phasing of launches. I mean, Mirabegron was launched in Q1, so you see some of the phasing. And we expected competition on products like Suprep and doxycycline that have shown into Q2 numbers. Having said that, I mean, a profitability quarter over quarter sequentially, as well as year over year, has been very strong. So we're very pleased to continue to improve profitability of the US business while sustaining the inline portfolio and tackling additional competition on products that have been exclusive.
Sure. I just wanted one more thing, is the update on the latest in terms of the litigation that is going for Myabatric. What is the latest on that front?
So the case has been remanded back to the district court by the Federal Circuit. So it's back to the same court that already ruled in favor of generics. So we'll wait to see the outcome of the district court over the next year or so. But we continue to build on our position on Mirabegron.
Okay, and then, we are waiting out for this result coming out on this front. But does that impact the FY25 outlook then? Because we had given the range of around $225 million to $200 million, something in that range for the US dollar revenue. What are we expecting on that front then?
Yeah, we continue to maintain that, I think, $220 to $230 million a quarter range going forward for the U.S. business on count of both the inline products, strong respiratory franchise, Mirabegron ramp up, while, we'll see some competition on products like albuterol and already started seeing on Suprep and doxycycline. We also have other new product launches that we have planned, some 4 or 5 launches in the second half. The generic Predfort, where we had CGT exclusivity that launched in October. And we hope to launch a couple of injectable drugs before the end of the fiscal, Dalbavancin and hopefully glucagon as well. So it's been exciting new product launch trajectory for our U.S. business.
Sure, and just you mentioned a bit in albuterol, so I just wanted a word on that as well, because sequentially a bit of a decline in terms of market share. So what are we watching out for here, and what was the impact this time in terms of the market share loss of market share in albuterol?
Yeah, so we haven't seen any material loss of share. I mean, there's always some phasing based on the prescription generation and the trade. Our albuterol revenues, units, and share has been fairly stable at the 20% plus. Couple of there may be some marginal change quarter over quarter, month over month, but overall there's not been any material shift. Having said that, we expect some competition impact of Amphastar that has recently entered going forward. So expect to offset that with our other inline products as well as new products that are ramping up.
Sure. Ramesh, I just want a word in terms of overall, given that there are so many triggers for the company as well, launches that are planned. What are we expecting in terms of revenue growth outlook for the second half of the year, FY26 as well? And in terms of margins, are these levels we are looking at something that is sustainable?
Firstly, on the growth, I think the trajectory will continue. So essentially, we would expect to grow a good double digit in the second half as well, vis-a-vis the previous year. And insofar as the margins are concerned, you would appreciate that it's been growing, quarter on quarter for the last 6 quarters, successive quarters, so to speak. But this is on the back of, in fact, a host of good launches, as well as, in fact, a tremendous focus on cost. On every aspect of the P&L, so to speak, in terms of the gross margins, that's gone up because of the buoyancy on the top line, and a host of lines below that. The productivity of people at the factory level, productivity of the sales force at the R&D level, and a host of other things in terms of the G&A itself. All of this has borne pretty good fruit, and that's there for people to witness. We believe that the core margin should be 23-25% irrespective of launches, and that's what we are trying to aim to. At the beginning of the year, we said that it should be around the 20.5 for the full year, or 21. So in the second, and this time around, given the buoyancy, we believe that we should be between 22 and 23% for the full year considered.
Sure. Nilesh, I just want a word in terms of, obviously, there's a lot of buzz that's coming around the GLP-1 drug. The company said that they're working on some bit of a license for this as well in terms of branded market, such as India plus oral semaglutide is something that they're working at. Any status, any update on that front?
Yeah, short answer, we hope to be in the first wave of people bringing GLP-1 generics or innovative products to the market. We're working obviously on semaglutide. We have others in the pipeline as well. But likely in 2026, we should be able to bring the first of these products to the market.
All right, so that's the management of Lupin. Let's take a short break, and as we do that, let's get you some exciting news for our viewers. Seize the opportunity to attend India's landmark economic summit. Show us that you're a true CNBC-TV18 fan. Answer a simple question in our Super Fan Contest. Head over to CNBC-TV18's social media channels, participate, get a chance to win a free ticket to CNBC-TV18's Global Leadership Summit. Hurry, the contest ends on 10th November. So 2 days to go. Answer now and you could be one of the 5 lucky winners. All details on your screen. Welcome back. You're watching us here on Halftime Report. Perfect time to get you in an update on everything that's taking place from the F&O end of things. Before that, just keep an eye out on MRF. The net profit's down about 20.5%. We'll keep an eye out on their margins. That'll be crucial to track this time around for all. A lot of the tire companies, rising input costs would have impacted their margins. Revenue growth at 11.1% and EBITDA is down 14%. So that's telling you there has been margin compression. And as a result of which, despite an 11% revenue growth, we have seen the net profit decline. Margins have come in from 18.5% to about 14.5%, so near 400 basis points decline in the margins. Net profit lower by 20%, and that explains why the stock is down about 1.5%. But getting back to the F&O end of things itself, the market has been fairly volatile all through today's trading session, and despite that, we haven't seen any respite from the lows after the first round of selling from the highs itself. The mid-cap index has it worse. You look at the market breadth as well. We've been pointing out that it's at the widest distance between the red and the green lines that we've seen from all through the morning. Almost 1,800 stocks in the red right now. But in that as well, there are a couple of outliers. Two stocks which are at 52-week high. Indian Hotels at a fresh record high, and Page Industries is at a fresh 52-week high itself. But there is still hope that there could be some support on the Nifty at lower levels. Why do I say that? Even as we have the 24,200 call writers fairly active telling you there is resistance on the way up, we've seen active put writing at 24,150, 24,100 and 24,000 levels itself. 24,150 put has a premium of 150 rupees. So those who are writing this hope for the 24,000 mark to sustain. Even the 24,100 put, there you have it. A lot of open interest built up out there as well for a premium for almost 130 rupees, telling you levels between 23,950 to 24,000 could be a support for the market. So that's something we will most definitely keep an eye out on, because if this support were to break, given the sort of put writing that we've seen, one, these put writers will have to unwind their positions, and secondly, we'll look at levels of 23,800 thereabout, which was last week's low on the index itself. A lot of short positions being built in a couple of individual names. We have Trent, Aarti Industries, Gujarat Gas, all of them in focus. And just keep an eye out on Manappuram because of the open interest build up and the stock move. The stock may enter F&O band today, so just watch out for that one.
Thank you so much, Bangla. Yesterday I remember you telling that the granules could enter the F&O band, and that stock too today has gone into the F&O band. And again, as you've been mentioning, quite a lot of stocks are on the back of heavy open interest actually entering the band. But moving on, let's slip into a short break. Up next, we will connect with Lakshman J. Rao, CMD at Mold-Tek Packaging, to discuss their Q2 numbers. Stay tuned. Welcome back to HTR. Mold-Tek Packaging is the next management on the show. The company reported a mixed set of revenues. Revenues came in healthy, while operating profit margin and profit after tax came under some pressure. We have Lakshman J. Rao, CMD at Mold-Tek Packaging, with us. Good afternoon, Mr. Rao. Thank you so much for joining us. Volumes in the quarter gone by are closer to the 7% mark. For the full year, you had earlier given a guidance of 15%. Will you now be trimming down your volume guidance expectations for FY25?
Yes, we initially thought we'd be able to reach 12 to 15% volume growth, but there were some hiccups in our printing capacities. The machinery which was ordered, expected to be here by April, May, just getting arrived in December. So that is 4 to 5 months, there was a change in the configuration, and the printing machines have delayed our growth to some extent. 3 to 4% growth is at least gone due to that. Mainly because the silver line here is there is a good demand for IML products. If you notice, from 65% last year, 66% in Q2, it now becomes 72.36%. So we didn't anticipate such a big jump, especially this has come from the paint industry. Thanks to ABG introducing IML.
Right.
There is pressure on other paint companies also to adopt IML. And this sudden surge in IML requirement has caught us a little unawares. So, but going in the third and fourth quarter, we hope we will reach a 10% volume growth at least.
All right, 10% volume growth in the third and fourth quarter. You spoke about ABG, so let's speak about the paint industry itself, Mr. Rao. Two things. One is that one would have expected, your EBITDA per kg to increase as your volumes are increasing. but they are still lower at 38 rupees per kg. And the second part, you produced almost 1,700 tons in the first half for Grasim. Your capacity here was 5,000 tons. What do you expect in the second half?
Actually, it's only 1,555 tons we made for Grasim in this 6 months. Maybe it will go up to 2,000 tons in the second half because they are also ramping up. And our Mahad plant is also starting commercial supplies. So hopefully it will reach 2,000 tons in the second half is my guess for ABG.
And on the EBITDA per ton, it's 38 rupees per kg. What do you expect for the remainder of this year and perhaps the next year?
Yeah, if you go through the P&L in detail, maybe you don't have access. The sudden jump is in the staff cost because we are completely filled our pharma division with all the capable people in quality control, in mold development, in production, in safety, all the areas because that requirements of pharma DMF is very stringent. And all these people are costing to the company while the pharma division is hardly doing about 10% capacity utilization, less than that. So those costs directly have hurt.
Okay. Mr. Rao, can you hear us? Yeah. Mr. Rao, what we want to understand is as far as the pharma part of the business is concerned, I think it's contributed close to 1 crore. In Q2, you've onboarded quite a few new clients, names like Markens Pharma, BioPlus Life Sciences. So when do these companies come on stream and when do they start contributing to the top line? Initially, what kind of margins can you expect from these companies?
See, I'm very glad the way our pharma forests are going. We have not only got orders from Marksen, small commercial orders, they will turn into bulk very soon because already mission trials and even minor small quantity supplies have been affected and they are found to be running smoothly on their assembly machines. Now we are anticipating to get bulk orders anytime in this month onwards. And with MSN also, all the formalities, including mission trials, stability tests have been conducted and passed. So they will be also start giving us commercial orders. And I'm also glad to tell you, 5 new products we are developing for pharma, 2 for Marksens, 2 for Pulse Pharma, and 1 is a generic product, which is meant for anybody, any other application. Many companies can use that. So
Mr. Rao, Mr. Rao, so going forward, percentage of top line, how will the revenue mix look like? What will be the contribution from the food and packaging or the food and pharma as you classify it compared to how it has been in the last couple of years?
See, pharma is hardly few months old in the company. Packaging is now, food packaging is contributing close to 28% of the volumes or 32% of the sales revenue. Coming to pharma, it's hardly 0.25% as of today. But going forward, in the fourth quarter onwards, we may see turnover crossing more than 1 crore per month. And in the next financial year, we are anticipating a turnover between 30 to 45 crores from the pharma alone. That will be because 5 new products which we are introducing now will go into stream by January. Molds are under development. And what we noticed is in pharma, there's a lot of depth for new product development. Very few people are capable of developing molds and product designs. And that's why we are able to attract the attention of pharma companies. And whenever they need a new product, they are now looking at Mold-Tek as a source. So that will give us an entry faster and probably become a reasonably big player in pharma in the next 3-4 years.
All right, 35 to 40 crores. What is reasonably big according to you? I mean, 35-40 crores is the next year target. 1 crore per quarter, 1 crore per month is the Q4 target. In the next 4-5 years, when your plants are entirely fleshed out, everything's utilized properly, what could the aspirational number be for you from the pharmaceutical industry?
3-4 years, we should be somewhere around 150 to 200 crores turnover coming from pharma with a EBITDA margin close to 30%.
All right, EBITDA margin close to 30% with 150 to 200 crore coming in. And because of this capex that you've done in pharma, along with the capacities that you've put for, ABG, etc., your asset turn has gone lower than the industry average of 2.5. When does that come back to 2.5? And what is your peak revenue likely to be once all the capacities are on full stream?
See, at 2.5 times, which probably might happen in 25-26 or 26-27, we'll be able to reach more than 1,000 crores turnover because our assets are more than 440 crores as of now. So 2 to 2.5 times we'll be able to achieve in this third year, because the first year is currently happening. 100 crores investment has happened in pharma, another 15-20 crores has envisaged in the next few months. So these 120 crores will start contributing only after 1-2 years. So by 26-27, we should be in the vicinity of 1,000 plus crores turnover with better EBITDA, because of pharma contributes higher EBITDA per kg.
Okay, give us a sense of the pricing pressure. Are you seeing, exaggerated pricing pressure as far as the paint segment is concerned?
Definitely, paint is a very established product line. Pails are there for last 40 years. We are the people to bring the pail concept to the country in 1990. So almost 35 years have gone by, and several product manufacturers have come up in different corners of the country. But all the top leading companies, they rely on Mold-Tek, high-tech, and companies of that caliber. So, and in IML, we stand heads and shoulders above the rest of the crowd. So that is where we still continue to maintain our market share in the paint industry.
Take that point. Thank you so much for joining in. We got two headlines. Over the next few years, you'll have 150 to 200 crore revenue coming in from, pharmaceutical, with 1,000 crore top line over the next couple of years, with even better margins as pharmaceutical contribution increases. In the second half of this year, you're expecting volumes to pick up near double digit, along with 2,000 tons being produced for the ABG group itself. This quarter, notwithstanding a decline of about 5%, is what we're seeing on your stock price. Meanwhile, just keep an eye on KCP Sugar. While we were having that conversation with the management of Mold-Tek Packaging, they reported their numbers. The revenues were lower, but my sense is that maybe the ethanol business has done a lot better for them. KCP Industries, that's the one that should come up for you. An 88% jump is what we've seen in their net profit, led by the EBITDA jump of 53% itself. And there you have it. That stock is up around 4%. So it's KCP, not KCP Sugar. Beg your pardon out there. Take a short break. Come back. We have more on the other side when it comes to the markets and individual stocks.
Welcome back to Halftime Report. Well, just taking stock of the market, some individual stocks that have rebounded to the session highs. The auto pack has made a bit of a comeback. So look at a name like Maruti Suzuki has recovered quite sharply. Along with that, even M&M, it's been a very volatile trading session as far as Mahindra & Mahindra is concerned, but that stock too has rebounded quite sharply. The other stock, at the start of the show, we did speak to the management of Lupin, and that particular stock too has seen a certain amount of buying that's come in, and that stock too has recovered quite sharply in the session. But on the other hand, some of the companies that are yet to report results, named like Aarti Industries, look at that particular name, down almost 6% ahead of the results. Along with that, the OMCs, have a look at names like HPCL, BPCL, IOCL, seeing intense selling pressure. And Petronet LNG, today seeing quite a bit of a sell-off, almost 5% lower as far as Petronet is concerned. And AU Small Finance Bank, from the financial space, that's one particular name that's taking quite a bit of a beating. But time now for a short break. On the other side, Manisha Gupta joins in with Sandeep Bhan, CEO of ST Guthrie International Limited. Stay tuned.
Welcome back. You're watching Halftime Report, and joining us now on the show is Sandeep Bhan. He is CEO at ST Guthrie International Trading. Sandeep, hi, good to have you. And while there's a lot of movement in commodities, all sectors really waiting for that China stimulus measure announcement. But ahead of that, another thing that we've seen run up quite strongly is the palm oil prices at 5,000 ringgit, a third straight week of gains, and the price is trading at a 2.5-year highs now. What is it that you would see as fundamentals for the price rise?
See, the price rise is mainly driven by the supply concerns of palm, and then we have only available oil today in big quantities, that is in soft oils. So palm's niche demand remains, and palm's availability remains a big concern in coming months.
Sandeep, we also do understand that when it comes to production from Malaysia or Indonesia, it hasn't really seen an uptick. Would you say it's now stagnating? So while the production isn't increasing, the demand is?
Definitely demand is on an increase. There's no doubts about that. In terms of supply, Malaysian production this year is going to be a bit better. It is not going to be something exceptional. 20 million tons is the max that this Malaysia can go about. That's in the next year. This year we are expecting somewhere around 19.4 to 19.5 million tons. Indonesia, where we take as 48.5 million, and this year we are seeing a million-ton drop. So Indonesia 14.7, next year back again the same 1 million to 14.8 or at the most 49 million tons. Malaysia for 19.4, 19.5 to a max next year, somewhere around 20 million. So it's not a big increase, hardly an increase of 2.5 million ton over this year's numbers.
So while we are looking at production increasing by 2.5 million, what's your sense on the demand going forward?
So demand at these current prices is now a concern because palm has rallied us sharply. It has gone above 5,000. It's trading at a huge premium over soybean oil and sunflower oil. Now at these prices, demand is a concern.
Sandeep, and it's not just an edible oil, as we've been talking, it's a biofuel as well. And palm is something that is used from pharma to medication to shampoos and soaps and conditioners and cosmetics and makeup. How are we looking all of this impacting all these industries?
Definitely the impact will be visible if prices keep on rallying higher and higher. It will have an impact on that. We see one of the ingredients used in the lauric side is crude palm kernel oil, which has rallied extremely sharply. Extremely sharply. So that will definitely have an impact on the product pricing. Demand is going down now.
Sandeep, we've seen 34.5% of gains in palm oil prices in this year. It clearly seems to be outperforming all edible oil as a space. That is one part of it. I mean, as you said, the softs is something to watch out for. But with the new US president taking over and expectations that you could be looking at perhaps some sanctions on some of those oil-producing countries, how is the biofuel story playing for palm now?
The biofuel story for palm is mainly Indonesia-driven, and Indonesia is on track in implementing its B40, and they are going ahead with the B45, maybe B50 later on. There's nothing in Indonesia which is showing any signs of slowdown in biofuel, in spite of the margins now being a bit negative. It's continuing its growth story, and they will continue it.
Sandeep, also when we look at soy and the way Argentina and Brazil also see it as a biofuel, would you say that edible oil and biofuel is going to have a tough tug of war going forward?
Not really, because post this US election, we will see more of a soybean oil in US going completely into the biodiesel there. The availability will be now, the world will look for, which was previously looking at palm oil in terms of supplying globally. Now that shift is there. That shift is now to the soybean oil, and that soybean oil is from Argentina and Brazil. Palm is not going to grow. Palm is going to maintain its niche market, and palm is going to maintain its premium over soft oils now.
Sandeep, so where do you see the prices going now? For the longest time, 4,000, 4,500 seemed like a resistance. We're standing at 5,000 ringgits right now. What is the new price range that you would see going forward for the rest of 2024 as a calendar year? And what does it really mean for India? Because we're the largest importers of palm oil in the world.
From Indian perspective, we have seen since this rally started, India didn't buy. India had slowed down a lot. In fact, Indians shifted to soybean oil. In terms of price outlook to give in current scenario is extremely challenging. In a bull rally like this, it's hard to predict which way the markets will go. Of course, like demand is becoming a big concern now at these prices. Globally, we don't see any much demand coming at the moment.
Thank you so much, Mr. Ban, for joining us and giving us your views. And thank you so much, Manisha, for joining us and taking us through what's exactly happening as far as the commodity space is concerned. Well, quickly back to the markets. The Nifty continues to trend lower, almost 0.3% lower. The Sensex 2 down almost 0.17%. And we're talking about the mid-cap as well as the small-cap index. That is where you're seeing majority of the selling pressure emerge. Both of these indices are down over 1% in the session. But that's all the time we have on this edition of Halftime Report. Business Lunch will take all the action ahead.